Hello everybody, it's me the Boss Hog, and today I'm going to talk you through the last week of my portfolio, which was pretty challenging, where I stand, my buys and sells, and my dividends as of the week ending the 19th of November. Let's do it. Alright, so honestly, a pretty dreadful week for me, one of my worst weeks, and actually my worst week in terms of financial loss rather than percentages, but still £3 grand loss in a week. Most of that, almost all of it in fairness, unrealised, it's just movements. Notable movements there I've listed, but the top four are my top four largest holdings. Together they represent about half of my portfolio. So obviously National Express here being down 4%. The market I suspected this was going to be a volatile share this week, but it wasn't actually for the reason I expected. Basically, they had what I thought was a put up or shut up acquisition of a bus company, but it got extended for another month. And in fairness, apparently it can be extended again because both parties are keen on the idea of a tie-up. So I'm assuming that they're just talking about particulars. It seems to be taking a very long time, so a bit frustrating really. And to be fair, originally the market didn't move at all on the news, and then toward the end of the week it just gave back all of its losses. So I'm marginally red once again on NEX, which is frustrating. Huntsman didn't have a particularly good week. This is no longer such a huge part of my portfolio, but still represents like a 10% of it. I have been gradually selling Huntsman, but still it just gave up 5%. That's a quite significant amount of money. EPD likewise 7%. That's my fourth largest stock. Huntsman, by the way, my third largest stock. BMY my second largest stock again, similar to NEX last week when I did minus 3%. And usually I wouldn't do less than 4% here, but BMY is again a pretty material part of my portfolio at the moment, about 16% of my portfolio. So giving up 3% felt material enough. Then I had WH Smith, who actually gave up quite a lot of their gains following their results. They did go up on just before their results, but they've come down since, which for me is good because I'd actually like to buy more WH Smith, so that's fine. Not a huge holding in WH Smith, about £1,000, so about 1% of my portfolio, but still, big enough to get a call out here. Disney also 4%. Again, before this week where I have been adding, as you'll see in a second, Disney was like 0.8% of my portfolio. And then Genie as well. I almost didn't include this because although it's down 14%, actually most of this I was buying as it was falling. So my loss on Genie this week was only really a couple of percent. I just had one share in Genie that I was keeping an eye on. It got mauled this week for, I guess people aren't very optimistic about the earnings next week. But again, as you'll see in a second, for me that was an interesting buying opportunity. So yeah, most of the week just felt like a struggle. Not quite a fully red week, but just during the week it was always something. And then on Friday, yeah, it was mainly National Express, where for each penny that National Express falls is like 200 quid, just because of the size of my stake in it. So I think it felt like 4p, and that's nearly a grand by itself. So that was pretty nasty. I did make a couple of notable moves this week in terms of trading. So one of my, back to a normal trading week for me, if that's quite the right term. Again, I am quite an active trader. I do trade quite a lot, and this week I made moves on Genius Sports and Disney. And again, I'll do those a little bit when we get onto the buys. I think most people are familiar with Disney, probably less so with Genie. So I'll give you a bit of a summary on my rationale for that one. £400 capital added this week as expected. Fine. And one dividend this week as expected. It was my biggest one of the month. I wasn't actually quite sure exactly how much I was going to get here, just because the FX has been a bit wild at the moment, and I did sell down some of my EPD shares a little while ago to buy National Express, although I did get really good buying a 217. I think I was selling EPD to buy National Express, so still comfortably up on those purchases. But yeah, I sold down about 15% of my EPD, so not quite as big as my dividend from EPD last time, but still, it's fine. So yeah, broadly, to be honest with you, as a summary, I found the week quite difficult. I'm quite a value investor. I do like a good bargain. I really think the National Express, EPD, and BMY are all materially undervalued. I've argued before, I think National Express about 50% undervalued. Huntsman now is probably about where it needs to be. I'm just kind of keeping it at the moment because I like it as an industrial, and I'm still waiting to see what the activist investor is going to propose. He should be publishing something in December, so we'll see what happens with that. BMY actually published, their investor pack, and to be honest with you, I mean, I'm not a chemist or a doctor or anything, so a lot of the medical stuff was a bit lost on me. But to be honest, the pipeline and everything else still continues to look really good. and their replacement revenue as things fall out of exclusivity, LOE, they call it, a loss of exclusivity. So looks pretty promising. Basically, if they can deliver on what they're saying, I think under $60 is just the easiest buy in the world. So again, maybe it's not a bad thing if I intend to be buying more of these shares. So that's I guess the way I'm trying to look at it. But it did feel quite grueling to have like these big positions that I really believe in actually going backwards, and that unfortunately dragged down my whole portfolio. So anyway, enough about my moaning and feeling sorry for myself. Let's look at the buys and sells this week. All right, so I'm just going to talk about three, but I want to do it in a little bit more detail than normal, though not huge amounts. So people might recall, if you've been following my channel for any length of time, I've been in for Genius for actually quite a few months now, and I had them originally for like $17.50, sold out at like $21.50, and was pretty happy. And then I've basically been watching it go down since, kind of getting a bit tempted about 17, but couldn't really find anything to sell. But now that it's under like 15, for me, it's just a sufficient safety margin. Now, in fairness, I'm really curious to see what their results are going to be on the 23rd. The market is definitely nervous about them, but I'm not really sure why. Their last quarter, they swung from a profit to a loss, but that was really just because they were chasing and actually won a couple of notable deals. They're clearly in the expansion phase. Yeah, they had to raise some money at like $19 a share a few months ago. Excuse me, sorry. And but broadly speaking, I'm expecting kind of a small loss, sure, probably a six-figure loss, but I'm not really too concerned about the business or anything like that. Like, I think it's got a lot of potential. It's got exclusivity arrangements with multiple organizations, including, I think, the NFL probably being the most notable. So yeah, I'm going to be curious what it looks like. Now, in fairness, I would have bought even more Genius. It's about 1.5% of my portfolio now. But I wanted to keep some powder just in case the results are published and it's not particularly great, and then reassess if I decide to average down, etc. So my average buy last week was at 14.60. Now the shares did finish the week on like 14, so obviously I could have been a bit more patient. And again, I would have been more than happy to buy at 14 if the results come out and I think they're okay results and they remain about 14 or dip. I'm going to be buying a lot more next week. So I'm not always fully comfortable investing in such early stage companies, and this clearly is. But again, I think here there's sufficient safety margin, and so yeah, I'm basically just getting back into it in a increasingly material way. So we'll see what that looks like next week. And again, it may well be a bigger holding this time next week. Now, Disney was pretty interesting as well, and I felt like, I mean, Disney was expensive. I've been saying it's been expensive for a little while. And it is expensive, but I just think it's a really good long-term holding for me. Like, it's a sort of share that you can buy and sleep safely at night. So it's one of those things that I just think is going to be around for a long time. Like, it's been consistently good at reinventing itself for a long time. I don't see why Disney's going to suddenly stop being good at that. Yeah, the Disney Plus subscriptions disappointed the market, but Disney didn't change their forward guidance. So I just felt like, the market was responding quarter to quarter. Disney are standing by their numbers, and they're way ahead of what they were originally expecting from Disney Plus, probably helped by COVID, to be sure, but then other parts of their business have really suffered because of COVID, right? Parks and cruises, etc. So for me, this was a case of, like, I looked at the business actually in quite a lot of detail, and something that really surprised me was just how good their ESPN side of the business is. Likewise as well, although there was some ARPU reduction, average revenue per user reduction on things like Disney Plus, it's really just a result of them expanding into countries without the same pricing power as America. But the business scales so wonderfully that that's okay, right? Like, if your costs aren't increasing very much and you're just taking slightly less per sale, that's okay. So yeah, so I actually spent a little bit of time on the business, probably about 3 hours, just really running the numbers and making sure I was comfortable to start building a stake, which is what I'm planning on doing at this kind of level. So my estimates for next calendar year are earnings per share of about $6. That would still be below what they were making in 2020 yeah, and 2019, to be clear. So I don't think it's particularly ambitious. When you look at analyst estimates, they range from like 5 to about 12. So I guess I'm on the more conservative side here. But I built in a couple of conservative assumptions, especially for the first third of the year. And I think $6 a share is a reasonable EPS target for Disney next year. So projecting that forward, like, if I'm getting 25 to 26 forward PE on a company of Disney's quality, to me almost starts to look like a bargain. And I know that's ridiculous. Like, it might not look like it at the moment, with their EPS in like the $1 kind of region. But again, this is a business I really expect to bounce back quite hard, especially once more the international travel starts opening for their parks. Likewise with their cruises, although that's still pretty American-led as far as I can tell. And in fairness, it was a relatively quiet period for Disney in terms of their content. So I just expect them to bounce back really strongly. And the more I read, the more bullish I got. Like, Disney's just such a humongous organization. Like, people just don't realize just how much it's actually got its fingers into. So for me, I think actually 154 I'm really comfortable buying, and I almost timed it perfectly. I picked up how many was it? 7 shares. I picked these up at like 153.80. I really timed it beautifully, assuming it doesn't go below that next week. But yeah, so this felt really good for me. I more than doubled my shares. I had 6, I think. Now I've got obviously 13, if that's right. So this felt really good for me, actually. And again, this is a company I feel really comfortable buying more shares in the 1.5x range. And we'll see in a year, basically, if my EPS crystal ball is correct. So see how that goes. Phoenix, I just wanted to talk about because originally, so this is in my personal ISA, and I got my wife's ISA as well. My original plan with my personal ISA was to put all of my dividends into Lockheed Martin, but following the earnings results and the crash in their share price, effectively, I started adding capital to it. So I decided instead that now I'm reasonably happy with my LMT position, which is about 2.5% of my portfolio. Instead, I'd give a bit of love to Phoenix. This is a life assurance expert insurer. Basically, it does niche insurance. But I think it's really starting to throw off cash. Its half-year results were good, beat the market, and I basically expect their full-year results to beat the market as well. It's a difficult business to understand because of the way that liabilities have to be treated for life assurance policies. I actually spoke to a friend who's an actuary about this, months ago, just to make sure I had some decent knowledge of the business to get my head around it. But really what you want to look at with this business is the cash flow. And that to me is really starting to come through, especially following their purchase of another big player called Standard Life. So I think I'm picking this up at a good price in the 655 range, give or take. So I've now got quite a big holding in these. They're about 4% and a bit of my portfolio overall. And actually, I think they deserve a little bit of love because they have like a thumping 7% dividend, and I believe they're about 10% undervalued at the moment. So this for me is just a good. Again, I really like UK insurers. This is a FTSE 100 company, by the way, that I'm pretty sure most people wouldn't have heard of, but it warrants some attention, I think. And as long as you can get your head around how they have to treat liabilities, again, some of the numbers look a bit red, but look into the cash flow situation, you'll be way more impressed than that. So, and again, I'm just putting my money in things I believe in. Hopefully, they'll come good in the long term, but we'll see. Anyway, that's all I want to talk about. If anyone does have any more questions about my buys, feel free. But let's move on to the sales next. All right, so on shares I sold, and again, just 3, although a smaller list this time. So I sold another 50 shares in Huntsman Corporation. My largest I had 700. I've now got 450. They've moved from my largest holding to my 3rd largest holding over the last few months. That's mainly because I believe that now the business is much less undervalued than it used to be, although I do still like the underlying direction of the business. It's just, when I was buying at 25 and I thought the business was worth 32, I think their latest results were pretty solid, so now I more think like 35, 36, but the business has been hovering in the $33 to $34 region, so it's like much less undervalued than it used to be, in my opinion. I'm really kind of sticking around for 2 reasons. Again, to see what the activist investor says in December, and because I do like it as my main industrial play. So I'm not in any rush to sell this, but I just felt like there's a good opportunity to pick up some money in a slightly riskier maybe portfolio, and a tech actually. My tech segment in my slice is very light, so again all of the money here went into Genius effectively from this sale, but I still like the direction of the company. I thought their last update was pretty good, and also I've seen early indications that the car manufacturing, which was the one division of theirs that was slightly underperforming just because of the extension of the semiconductor world, is starting to pick up. So again, I would expect their products into cars to start accelerating, and that might actually be an earnings boost when they next have it. It'll be interesting to see, so I'll keep an eye on that. Next up we have Games Workshop. I did get a bit muddled with some of my buys and sells this week. You'll see both Restaurant Group, which we'll get to in a second, and Games Workshop are on my buys as well. But this is really reflecting of when during the week I was buying. Basically my buys were in the early parts of the week, and then my sells are in the latter part of the week, basically to free up money after Disney and Genie. reduction. So again, I still believe actually that at £96 here, I'm basically selling a bit of a winner. But I wanted to get into Disney. What can I say? Most of the money from Games Workshop went into Disney and a little bit into Genie, but most of it into Disney. Yeah, I mean it's in the same segment. I am a little bit light at the moment on dollars, sorry, and I just felt like it was fine. I crystallized a really small loss here of like 12 quid on these 6 shares, sorry. So not ideal, but again, I think it's okay. Actually, I don't regret that move at all, so I'm honestly fine with it. You shouldn't really be faffing around with buys and sells of the same companies, because especially for UK stocks, you'll get like a 0.5% stamp duty charge on anything you buy. And obviously crystallizing a loss never feels great, but it is tiny, and again, I'm happy with my move. So RTN here, or restaurant group. So my wife, in Peter Lynch dedication, gets 1% of my portfolio to pick a company of what she wants. She's previously had Pets at Home and Hewlett Packard, and has done pretty well, especially with Pets at Home and modestly with Hewlett Packard. This one I was the most risky about, but actually it published pretty good results. Very surprising, actually. I think the market also was really caught off guard. So the share price went up like 17% in one day. Super robust, increased profit guidance. Again, I mean, this is a restaurant business, obviously, but it owns some good names. Wagamama being the main one, which is going to be super familiar to most Brits, I'm sure. But yeah, really great results, keeping a pretty good lid on inflation, earnings increase, paid down debt massively, 40% reduction in debt, because it's really starting to generate a lot of cash. So whereas before I was actually deeply concerned and averaging into this very slowly, just because it had so much debt, and I was a bit nervous about how it was going to recover from COVID, like honestly, it seems to be recovering better than the general high street and the sector as well, which is something they also pointed out too. So it just seems like it might actually emerge as a winner, one of those companies that's well positioned and has good brands at fair prices that people like. And I have to say, I mean, my wife and I like many of their companies. That's why she picked them effectively. She likes eating at almost all of their restaurants. So this was pretty interesting. Might be a bit weird that I sold, but I'd been down like 7%. With a 17% increase, I was nice and green. I decided to sell, but I have kept about 0.1% of my portfolio in RTN, and now I actually feel much better buying RTN at the current prices. I had a bit of a pullback after that big jump, so now for me it's just a case of averaging into this, and I'm quite tempted to start putting my wife's ISA's dividend into RTN, which was previously going into Johnson & Johnson. But again, if you watched my video last week, I sold out of J&J because they announced the split, and that to me was no longer the ETF healthcare business that I bought into. So I may well start dripping my wife's dividend into Restaurant Group. I think it's a nice way to average into a stock, especially one that I would still count as fairly risky. But again, following their results last week, actually pretty good. And yeah, I think the market reassessed them a little bit. Still some concerns to get through the winter, and there's a lot of inflationary pressure at the moment on many things. But yeah, so I think Restaurant Group surprised me. So even though I sold them, again, I think actually I'm more optimistic on the business than I was a week ago. But again, to me, this was just to free up, 500 quid or 440 quid to go and buy some more Genie. So we'll see if this works out the right move. But yeah, overall, like I said, difficult week. I made some moves toward the latter end of the week that I think are good. With certainly Disney, I'm really happy with. Genie has got some risk, and on Tuesday, I'm either going to feel like I've got a bargain or I'm going to feel like an idiot. But I've kept some powder back just in case we do want to buy some more Genie shares, depending on how the market reacts. So we'll see. Anyway, hopefully I'll be back above the 6 figures next week, because that's a nice psychological, what's somewhat arbitrary number. Otherwise, though, I've been the Boss Hog. Thank you very much for watching, and good luck with your investing, everyone. Bye for now.